Welcome back. Today we are conducting a comprehensive institutional-grade financial analysis of BlackRock Incorporated following your custom structural request to break down their Q4 2025 results. Before we break down every chart in extreme detail with a professional analysis of the underlying data, please like this video and subscribe to the channel for more financial reporting. Let's begin. BlackRock Incorporated, listed on the New York Stock Exchange under the ticker BLK, stands as the unrivaled titan of the global asset management industry. At a recent closing price of $957.91, we are observing a company that commands a massive market presence and serves as a primary pillar of global financial infrastructure. The stock's recent daily decline of 1.21% reflects the broader market's ongoing adjustment to interest rate expectations, and macroeconomic uncertainty. However, to understand the long-term institutional case for BLK, one must look beyond these daily snapshots. This TradingView header acts as our primary entry point into a complex narrative of asset gathering power and technological integration. As the world's largest asset manager, BlackRock's performance is often seen as a bellwether for investor sentiment and capital flows across all asset classes. The data shown here, including pre-market activity and closing levels, provides the baseline for our exhaustive review of the firm's fundamentals. As we transition through our custom-ordered dataset, keep this immense scale in mind. It informs every ratio, earnings surprise, and strategic acquisition we will discuss today. Our goal is to provide institutional-grade clarity on why BlackRock remains a foundation of modern portfolios. Now let's look at valuation. Examining the valuation ratio trends provides a clear view of how the market has historically priced BlackRock's growth and technological lead. The P/E ratio is currently at 30.58, while the PS ratio stands at 7.10. A PS of 7 is typical for a best-in-class financial services firm that increasingly derives its value from high-margin technology revenue like the Aladdin platform. The trend lines for both PE and PS show a remarkable level of stability over the last several quarters. After a period of minor fluctuation between early 2024 and mid-2025, the ratios have maintained a steady range, suggesting that the market has found a sustainable and comfortable valuation for the firm. This stability is a massive positive for long-term investors, as it indicates the stock is being rewarded for its fundamental execution rather than wild multiple expansion. The price tends to move in direct proportion to the firm's ability to grow its assets under management and its technology fees. The slight upward trajectory in the P/E ratio in the latest quarter reflects renewed investor confidence in future growth through private markets and infrastructure. This chart confirms that BlackRock is fairly priced for its dominant market-leading position. Now, let's look at key financial stats. Analyzing the key financial stats and ratios further deepens our understanding of BlackRock's operational health. The price-to-sales ratio of 6.43 and the enterprise value to EBITDA ratio of 17.09 define a company with a very efficient capital structure. A ratio of 17 is quite healthy for a global powerhouse, indicating that the firm is generating significant operating profit relative to its total enterprise value. This metric is a key health indicator for institutional investors because it accounts for both debt and cash levels. The price-to-earnings ratio of 30.58 reflects the market's high expectations for future profit expansion. In contrast, the price-to-cash flow ratio of 42.93 suggests that the firm is in a heavy investment cycle, likely directing its liquidity toward massive strategic acquisitions and platform upgrades to maintain its technological edge. The bar charts from 2024 through 2025 illustrate relatively stable metrics, even as the scale of assets managed continues to climb. With nearly 25,000 employees as of 2025, BlackRock's human capital engine is clearly capable of maintaining this high level of efficiency. These stats point to a business that is fundamentally sound and getting stronger with every passing quarter. This is institutional stability. Now let's turn to the income statement. The summarized financial statement for BlackRock brings the entire operational P&L story together. Total revenue for the last quarter reached $6.97 billion, a healthy 6.56% increase compared to the previous quarter. This consistent quarterly growth is exactly what investors look for in a market leader. Even more impressive is the gross profit of $5.28 billion, indicating an exceptionally high margin typical of elite technology-led financial firms. This margin gives the company ample room to fund its global research and marketing efforts while still leaving significant profit at the bottom line. The operating income reached $1.75 billion. The operational leverage is a key point of focus. As the firm scales its technology platforms, operating expenses should ideally grow slower than revenue. Pre-tax income reached $2.07 billion, while the final net income for the quarter was $1.13 billion. Delivering over $1 billion in quarterly profit is a major achievement that proves BlackRock is a highly profitable and disciplined machine. The steady upward trend in net income reinforces the narrative that the firm is successfully scaling its bottom line alongside its top line. This is disciplined management at its peak. Now let's look at the financial position. The balance sheet provides the ultimate evidence of BlackRock's stability and financial power. Total assets for Q4 2025 have reached an incredible $170 billion. Specifically, the chart shows a 4.50% increase from the previous quarter, representing a healthy and disciplined expansion of the firm's own resources. On the other side, total liabilities increased by 7.57%, reaching $108.46 billion. While liabilities rose, they remain well covered by the massive asset base. In the asset management business, much of these liabilities are related to long-term operations and strategic financing that supports the firm's global scale. Comparing the relationship between assets and liabilities across the timeline, BlackRock maintains a substantial equity cushion, with assets exceeding liabilities by over $60 billion. This fortress balance sheet gives the company the flexibility to fund major acquisitions or weather unforeseen economic shocks. For long-term investors, this chart is deeply reassuring, showing a sound business getting stronger every quarter. It is the bedrock upon which BlackRock's global dominance is built, ensuring it remains the investment manager of choice for the world's largest institutions. This is institutional-grade financial health. Now, let's examine the cash flow. Cash flow is the lifeblood of BlackRock, and the data reveals a massive liquidity engine in constant motion. For the most recent quarter, the company reported available free cash flow of $2.19 billion. On an annual basis, fiscal 2025 was a landmark year with $3.75 billion in free cash flow and an operating cash flow reach of $4.12 billion. This staggering liquidity provides the firepower needed to fund ongoing expansion and strategic pivots into infrastructure and private equity. Breaking down the components, cash from operating activities reached $2.32 billion in the last quarter. This is the actual cash generated from advisory and technology services. On the investing side, we see an outflow of $251 million, reflecting the firm's reinvestment into its proprietary technology and global infrastructure. Financing activities showed an outflow of $588 million, representing disciplined debt management and shareholder returns. This balance between generating massive operating cash and strategically deploying it for growth is a masterclass in capital allocation. With a $4 billion annual operating cash engine, BlackRock has the financial flexibility to weather any economic headwind. Now, let's look at the earnings performance. The earnings per share story for BlackRock provides a clear view into its operational leverage and profit efficiency. In the most recent quarter, the company reported an EPS of $13.16, crushing the analyst estimate of $12.24 by 7.56%. This significant earnings surprise is a indicator indicator of tight cost management and a favorable product mix weighted toward higher fee active and alternative strategies. While revenue beats are essential, EPS beats tell us how much of that revenue is actually being converted into profit for shareholders. A nearly 8% surprise for a company of this scale is substantial and typically triggers positive reassessments from analysts. The EPS history shown in the chart illustrates a pattern of consistent outperformance since early 2025, with surprises as high as 12% in previous quarters. This consistency is highly valued as it suggests a low level of operational risk. For the upcoming Q1 of 2026, analysts are looking for an EPS of $12.40. This estimate reflects the firm's conservative guidance and the market's expectation for continued excellence. Profitable scale remains the key narrative. Now let's examine the dividends. BlackRock's dividend payout history is a testament to its financial maturity and commitment to returning value to shareholders. The most recent dividend was reported at $5.73 per share, representing a reliable and growing income stream for investors. Looking back through the table, we see a disciplined history of increases, moving from $5.10 in early 2024 to the current level. This steady progression is exactly what dividend growth investors look for, as it signals a company with highly predictable and robust cash flows. A rising dividend is often the best indicator of management's confidence in the future of the firm's asset gathering capabilities. BlackRock pays its dividends quarterly, ensuring a consistent return of capital to its global shareholder base. In an environment where market volatility can be high, this consistent payout history provides a psychological and financial floor for the stock. The ability to increase the dividend by over 12% in less than 2 years while still funding massive technological reinvestment is a rare feat. This payout profile reinforces the narrative of BlackRock as a stable, institutional-grade asset suitable for long-term compounding. Reliability is the core message. Now for the dividend insights. Deepening our look at dividend insights, we see the metrics that define BlackRock's yield profile. The current dividend yield stands at 2.18%, reflecting the stock's strong capital appreciation as the market prices in higher growth. The total annual dividend per share has reached $20.84 with a yield of nearly 2% based on fiscal year metrics. The bar chart from 2021 to 2025 shows a clear and disciplined upward trajectory in total payouts. This staircase of growth is a powerful signal of financial health. The trend line for the dividend yield has remained relatively stable, suggesting that the company is successfully growing its payout in line with its stock price performance. In an environment where many firms are cautious with capital, BlackRock's ability to fund global expansion while simultaneously raising its dividend is a testament to its cash-generating power. This profile provides long-term holders with a meaningful component of total return. For institutional investors, this consistent return of capital, combined with the firm's dominant market position, creates a compelling case for the stock as a foundational holding. This is financial stability. Now let's look at revenue. Examining the quarterly revenue performance, BlackRock demonstrates a consistent track record of meeting high-level market expectations. For the most recent period, the reported revenue reached $7.01 billion, significantly beating the analyst estimate of $6.76 billion. This surprise of nearly 4% is a powerful indicator of strong execution and the firm's ability to capture massive capital inflows. The reported figures have consistently climbed from $4.7 billion in early 2024 to the current historic highs. This type of reliable top-line growth is what attracts significant institutional capital to the stock. Comparing the quarterly bars, we see a consistent step up in volume, reflecting the company's successful capture of the global shift toward exchange-traded funds and integrated technology solutions. The market rewards this predictability because the absolute scale of revenue growth remains a dominant force in the financial sector. Looking forward, the revenue forecast into 2027 remains aggressive, with projections pointing toward a path that pushes comfortably toward the $8 billion per quarter mark. This visibility into the long-term pipeline is a hallmark of BlackRock's transparency. Now, let's conclude with segment performance. We conclude our deep dive with the regional and segment performance data, which reveals the staggering scale of BlackRock's annual revenue engine. The company generated over $24 billion last year, with the primary driver being investment advisory, administration fees, and securities lending, which contributed a massive $19.18 billion. This represents the core business of managing a vast array of index and active strategies. The technology services and subscription segment generated nearly $2 billion, driven by the Aladdin platform. This recurring revenue stream differentiates BlackRock from traditional managers. Geographically, the Americas remain the primary fortress for the firm, accounting for nearly $16 billion of total revenue, a significant increase from the previous period. The bar chart from 2019 to 2025 illustrates an incredibly consistent growth trajectory. BlackRock is a technology-led financial infrastructure provider. The steady rise across every source of income shows a disciplined operator capable of scaling a global organization while maintaining its innovative edge. This domestic strength and segment diversification provides the bedrock for BlackRock's global dominance. This is the industrial heart of the firm. Now for our final wrap-up. That concludes our exhaustive reorder deep dive into the Q4 financials for BlackRock Incorporated. The data shows a company with a rock-solid balance sheet and high-margin recurring revenue. What are your long-term thoughts on BLK? Is the stock's premium valuation justified by its technology lead? Let us know in the comments below. Don't forget to like, subscribe, and hit the notification bell for more. Thanks for watching.